finds more than half of the adults we reached are under more financial stress now than they were a year ago.
Inflation is rising.
Here at home, inflation.
Michael, and Americans are feeling this, the highest inflation we've seen in this country in nearly 40 years.
This is the inflation rate going back to the late 1930s, and we are seeing an increase that has been seen since 1982. Gas prices are soaring, home prices are skyrocketing, and supply chains across the globe are being heavily disrupted, which has been deeply affecting consumers all over. So what is causing these inflated prices, and how long can we expect this to last? First, let's start with what inflation is. Inflation is the progressive increase in prices for goods and services. So as these prices increase, each unit of currency buys fewer and fewer goods. So your purchasing power is rapidly diminishing. You can see this in many areas of your day-to-day life. For example, prices for groceries as of March 2022 were 9% higher than the year before, which is the fastest year-over-year increase since 2008. The government calculates this general level of inflation using the Consumer Price Index, or CPI. And the CPI is at its highest rate since 1982. Inflation is currently hovering around 8.5%. The Federal Reserve has a goal of a 2% average annual inflation rate, which is generally thought of as the ideal level to prevent economic distress. So what are the dynamics at play here to cause this increase in inflation? Some people will blame this guy or this guy, but it's a bit more complicated than that. Let's talk about cost push inflation. This occurs when prices increase due to increase in production costs, such as raw materials. These will be things like your wheat, which will affect your loaf of bread at your grocery store, and your lumber, which will directly affect the cost of your newly constructed home. And these increases are directly passed on to consumers in the form of higher prices for these finished goods. The massive supply chain crisis going on right now is also affecting prices. There's a shortage of supply for many commodities, which is driving up the price for many items people depend on. Major ports around the world that used to operate like clockwork are now flooded with delays. Container ships are experiencing some of the worst congestions ever recorded. And Russia's invasion of Ukraine severed key supply lines for commodities such as nickel, aluminum, and wheat. Another factor that plays a vital role in this rise of inflation is demand. Demand pull inflation can be caused by strong consumer demand for a product or service. Gas prices can be made up of many factors, but the largest contributing factor is the cost of crude oil. And this fluctuates based on demand and supply, battles between major companies over price control, and geopolitical issues, a lot of which you are seeing today. And crude oil hit $100 a barrel in March after Russia invaded Ukraine. This is the first time in 12 years it breached triple digits. And since the Russian invasion, the average price for regular gas in the United States increased by 17%. Another example is the housing market. The low interest rates that we experience increases demand for owning a home. And this increase in demand and the cost to build a home decreases the supply of homes on the market. This strong demand and low supply of houses are causing home prices to soar. Then of course you have fiscal policy. The government tries to reverse this trend of inflation using interest rates, which saw historic lows during 2020 and 2021. Right now, you are seeing the Federal Reserve raising interest rates to try and tame inflation. You see, the assumption is that when consumers do not have as much money to spend, they will make a downward reversal in their spending and consumption habits, in turn, reducing the aggregate demand in the economy while also bringing down the level of inflation. This is because interest rates affect the rates of all forms of borrowing, such as your student loans, mortgages, and credit cards. And I'm sure you're asking yourself, what about all the money the government has been printing? This is a major issue to discuss, but let's first talk about Milton Friedman. Milton Friedman was an American economist and Nobel Prize winner. Milton Friedman's quantity theory of money proposes that inflation is always caused by printing too much money. And he was pretty adamant about this.
Inflation is made in Washington because only Washington can create money. And any other attribution to other groups of inflation is wrong.
Now, while Milton was a brilliant man, he was just from a totally different era. We are living in different times. Our financial system is a lot more complex than what it was in the 70s and 80s. In 2008, there was a large supply of money infused into the economy, and inflation still did not reach 1970s and 80s inflation levels. But these are unprecedented times, and the government is printing more and more money out of thin air as we speak. Now, during these uncertain times, it would be beneficial for us to look at the last time we went through a major inflation crisis. This inflation was brought onto us because of the energy crisis. The 1979 energy crisis occurred in the aftermath of the Iranian Revolution, which started in early 1978 and ended in early 1979 with the fall of the state's monarch. Turmoil in Iran, a major petroleum exporting country, caused the global supply of crude oil to decline significantly, which caused panic buying of gas throughout the United States. Similar to what you are seeing today with Russia and Ukraine. During this time, there was also a huge surge in government spending. Inflation during this time peaked in 1980 at 14.8%. The Fed chairman at the time, Paul Volcker, increased interest rates from 11% to 20% to try and tame price inflation, which he did. So how long would this inflationary period last? Inflation lasted for about a decade in the 70s and 80s. But no one truly knows. The Federal Reserve Chairman Jerome Powell has outlined a plan to curb inflation that's happening right now. But unfortunately, the Federal Reserve can't just wave a magic wand to decrease the price of your latte in the morning or the current values of homes on the market. But tight fiscal policy, such as raising interest rates, is something that worked in the past, so it's definitely something that you'll see more of throughout the year. Thank you to everyone who made it to the end of this video. I will be making more videos like this, so please like and subscribe. I have some exciting stuff coming to this channel about wealth, money, business, corruption, and much more. So again, please like and subscribe, and I'll see you next time.